Hello traders, this is Fawad market analyst for City Index. Today is the 17th of September. So the markets remain quite unsure about the pace of the rate cuts, and with the Fed meeting happening tomorrow, the market is attaching around 60% probability that the rate decision will be a 50 basis point rate cut. We've had some slightly stronger than expected economic data from the US. Today, headline retail sales came in at plus 0.1%. when negative 0.2% was expected for the month-over-month reading. We also had industrial production, which came in at 0.8% month-over-month. And the day before, we had the Empire State Manufacturing Index coming in at 11.5, which was much higher than expected. So as a result of the stronger data, we've had some strength in the US dollar coming in. Today, the euro dollar is a touch weaker, finding resistance from the shaded region where previously it had found support and resistance, but it remains within this 200 pip range between 110 to around 112 ahead of the Fed's decision. So if the Fed opts for a 50 basis point rate cut tomorrow, I think the euro dollar is going to rise and possibly head towards the July high from 2023 at 112.75. However, if the Fed opts for just a 25 basis point rate cut, I think initially that could lead to some disappointment and we could see the euro dollar drop. But then the focus will quickly turn to the FOMC press conference where Jerome Powell may provide a hint that rate cuts are going to accelerate from here on. And then that could be deemed a dovish scenario. So expect to see lots of volatility in the FX markets and indeed in the indices as well tomorrow. The stronger dollar has helped to support the dollar-yen currency pair, and this has found support from around the 140 area. It did dip below that yesterday before bouncing back. Now it is testing resistance right here at around 140.170 to 142.20. This shaded region, which is going to be very important for this pair. So it's possible we could see a resumption of the downward trend from around here. However, if it turns out to be more hawkish than expected tomorrow, then there's a possibility we could see rates climb all the way to 144, possibly even 145 area around here before deciding on its next move. But essentially, the trend is bearish for this currency pair. So we would favor looking for resistance to hold and for support levels to break down. A quick look at the crude oil market here. Prices have risen for the last several days. However, this comes on the back of a sharp drop in the last month. And now we are retracing against that drop. Right now, the WTI contract is trading inside this shaded gray region, which was previously a major support zone. This area could turn into resistance because of growing demand concerns about crude oil. And there's also some concern about rising supply at the same time as well. So we are on the lookout for a bearish price pattern to form around this shaded region. And if so, then we could see the onset of another potential drop in oil prices. Should prices turn lower from here, then the next major downside target is liquidity below the recent low at 64.95. Thereafter, we have the May 2023 low at 63.60. So despite the decent recovery here, we are a bit skeptical that the momentum can carry forward owing to concerns about demand. Now, for more analysis and market insights, make sure to check out the news and analysis section at cityindex.com.